Welcome to the Commerce Mentorship Program's online lecture series. My name is Richard and I'm the online tutor for Commerce 294, Managerial Accounting. Today, I'll be going over some of the key concepts and competencies that you can expect to face as an introductory management accounting student. I will begin by providing you with a brief overview of the course, pointing out key topics and subject areas. I will then guide you through the key differences between managerial and financial accounting, as well as some key terms and vocabulary that you should be familiar with well before your second week in the course. At the end of this video, I will review our goals and objectives for today. Your job is to ensure that you have met each of these objectives and fully understand them. If you have any questions at any time during the video, make a note of it and speak to your instructor or teaching assistant. Not everyone will initially understand the concepts at hand, and you may find that you require some assistance. Please note that this is perfectly normal. By the end of this video, you should be able to identify the key topics and concepts covered in Commerce 294, identify the key differences between managerial and financial accounting, define various production-related vocabulary such as direct materials, direct labor, and overhead, and distinguish between product and period costs, sunk and opportunity costs, and variable, fixed, and mixed costs. Unlike Commerce 293, Commerce 294 emphasizes application of the concepts rather than memorization. This means that students should work on developing their analytical and problem-solving skills rather than memorizing rules or particular solving techniques. Successful students will be able to think outside the box and use their skills from this course and from past courses to approach a vast variety of problems and issues. They will not only be able to look at individual aspects of a problem on their own, but as the entire problem as a whole. Lastly, to be successful, students must be able to think both qualitatively and quantitatively. While getting the right solution is important, management accounting courses require the student to consider qualitative reasons as well. Before saying yes, think about it. Will there be an HR issue? Can our supply chain keep up with the newfound demand? Does our decision give us room for long-term growth? Make sure you consider all subject areas. In your introductory management accounting course, you can expect to cover the following topics: financial versus management accounting, cost terms, concepts, and classifications, including the differences between fixed, variable, and mixed costs, as well as sunk and opportunity costs, job order costing, activity-based or ABC costing, cost behavior and analysis, including the high-low method, cost volume profit analysis, including calculating a break-even, a point of indifference, and a margin of safety, as well as budgeting, which includes cash and production budgets. You should also look into standard costing, reporting for control, including return on investment and residual income, and lastly, relevant decision-making, my favorite part of the course, which involves analyzing decisions faced by companies on a daily basis. Relevant decision-making is perhaps one of the most valuable topics covered in COMM 294 and will draw upon all other topics as well as your knowledge of other subject matters. In COMM 293, students worked on their financial accounting skills. In other words, students worked on the preparation of external information for shareholders and those outside the organization. Information was based on the past or historical transactions of the firm, and verifiability and precision were emphasized. In managerial accounting, students will work on the preparation of internal information for managers who control and direct a company. Information will focus on the company's future, and particular emphasis will be placed on its relevance for planning and control, as well as its timeliness. Financial accounting also looked at the companies as a whole, and students often found themselves preparing year-end financial statements that had to be in accordance with generally accepted accounting principles, GAAP, or International Financial Reporting Standards, IFRS. Managerial accounting focuses on specific segments or product lines, and need not be in accordance with IFRS or GAAP, as is information directed at internal eyes. With that in mind, let's move on to some key vocabulary that you may encounter time and time again in this course. We will begin with production-related vocabulary that is encountered in almost every section of this course. Let's begin with direct materials. Direct materials are all parts and raw materials required to manufacture something into a complete product. These are items that can be traced directly to the complete product. Examples include a radio installed in an automobile or the wood required to build a table or bookcase. Direct labor costs are those that can be easily traced to the manufacturing of a product. They include hourly factory workers, but not the custodian who cleans the entire factory or the payroll clerks for the entire factory. Manufacturing overhead consists of indirect labor, such as custodians and security guards, as well as indirect materials used to support the production process, including oil to lubricate the gears or gas for the machines. Direct materials, direct labor, and manufacturing overhead make up the term product cost or production cost, which are defined as all costs on a factory floor. The contrast to this is period cost, which consists of general, administrative, and selling costs, such as the CEO, the salespeople, advertising costs, information technology staff, head office heating and utility costs, and more. Another key concept to grasp onto is the difference between sunk and opportunity costs. Opportunity costs are the loss of profit from other alternatives you didn't choose. For example, if you chose to study one night, your opportunity cost may be the Taylor Swift concert. These should be considered when making a decision. Sunk costs are any past costs that are not recoverable. A prime example of a sunk cost is depreciation. You can't unpurchase old machines, so depreciation is a sunk cost. As such, the original cost of a machine is also a sunk cost. Finally, it is important to make a distinction between fixed, variable, and mixed costs. Variable costs are costs that increase by the same amount for each unit you produce. For example, if you require one more gadget, you will need to increase the number of labor hours consumed by 1 hour. Fixed costs are costs that stay the same regardless of the number of units produced. For example, your office manager who gets paid the same salary yearly would be a fixed cost. A mixed cost is a cost that involves both variable and fixed portions. A good example of this relates to cell phones. If you were to pay a 911 fee every month, which is fixed in nature, as well as a per-minute charge for each minute you call on your cell phone, which is variable in nature, this would be a mixed cost, as it contains fixed and variable portions. This concludes the online tutorial on the introduction of Commerce 294. Let's review our objectives for today. By now, you should be able to identify the key topics and concepts covered in COMM 294, Managerial Accounting. You should be able to identify the key differences between managerial and financial accounting. You should be able to define various production-related vocabulary, such as direct materials, direct labor, and manufacturing overhead. You should be able to distinguish between product and period costs, sunk and opportunity costs, and variable, fixed, and mixed costs. If you are unable to complete any of these objectives, now is a good time to re-watch this video or complete more exercises related to this section in your textbook. Remember that the textbook is not a substitute for going to class. The textbook will cover basic theories and basic concepts, but your instructor is the one who will be going more in depth, take questions, and write the exam. For additional problems, please visit us online at cmp.cus.ca. That's cmp.cus.ca. If you have any additional questions, please consult your professor or teaching assistants. Thank you for listening.